everybody. Good to see you. This is Titan International. We'll kick off and do some questions here from Joe, but just via introductions. My name is Paul Reitz. I'm the CEO and president of Titan. I've been in this role. This is the end of my 8th year, and we got an exciting company. We do some pretty cool things, so look forward to sharing it with you.
Good morning. My name is Joe Gomes. Paul and Tony, thanks for joining us today for this fireside chat at NobleCon20. And let's start off with the easy one. For those new to the Titan story, can you give us a brief overview of the company, the different operating segments, as well as the products you sell?
Yeah, so we are into 3 segments: agriculture, construction, equipment construction, and consumer. Yeah, and we are a company that manufactures wheels, tires, and undercarriage equipment. A global company in North America, Latin America, Europe, and Asia. We serve customers all over the world. You think about farming, you think about construction, and you think about lifestyles, that we all participate in that. From an ag perspective, we serve the large OEs, through our products, manufacturing wheels and tires. And also we serve through the dealers, the aftermarkets as well, to support the farmers. We have product managers who go out there, partner with the farmers, understand their needs, bring that information in-house, work with the R&D team, and then try to take out the next product that helps the farmers achieve their goals. Productivity, efficiency in operations, we drive all that with the farmers, helping them deliver those results. From a construction perspective, we work with the large OEs as well, out of the construction space. We also work in the mining space and moving, if you think about it. And then when we think about consumer, we also look at products in the ATV, UTV space. We look at high-speed trailer tires. And of course, we also have outdoor power equipment like the lawn and garden equipment as well. So we serve all those in the consumer space. And that's what we do in a nutshell.
Thanks for that. Now, LSW, or low sidewall technology, is Titan's flagship product. Can you discuss the product, its construction, benefits to customers, as well as its further runway for growth?
Yeah, no, absolutely. So like Tony said, what we do is off-road. Generally speaking, it gets dirty. We have a strong niche in the products we produce. But one of the advantages we have is because we're the only company in the world that's truly focused on wheels and tires and undercarriage and the off-road applications. We're able to take a wheel and a tire and do some unique things like Joe was just asking about. So low sidewall. I just asked these guys this question, but who has an SUV in this room? All right. You ever looked at your tires?
Oh, yeah.
What do you say? Describe to me the sidewall on the tires on your SUV.
Mine are pretty beefy.
Well, what do you got? Like an off-road truck? Are you trying to be cool?
Toyota 4Runner.
All right. But if you have a who has an SUV they drive their family around in?
Yeah, got a 2016 Yukon XL. It's got pretty low sidewalls.
There you go. That's what I'm getting at. So if you're looking for comfort, how's that ride? How's your 26?
It's a little bumpy in some areas, but
It's a heavy vehicle. But just imagine if you were to replace that with what used to be how a wheel and tire worked, and when you talked about trucks and off-road applications. But an old pickup truck had a sidewall like this and a wheel about the same. Yours now is probably 80% wheel, 75-80% wheel, and just a little bit of sidewall, right? So if you look at this picture on the screen there, that tractor doesn't do it justice, but that's one of the world's biggest tractors, 9000 series John Deere. That tire and wheel combination that's on there, that tire is about 5 feet wide and about 5 feet tall. And what we've done is being the only wheel and tire manufacturer in the agricultural space, we've taken the low sidewall concept, brought it out to the field. What that does is improves performance. Instead of that tractor bouncing up and down the field, it rides smoothly across it. So you got this wide footprint. Just imagine it this way. You got a wide footprint that we're able to reduce the PSI down to about 12 PSI. So if you look at your SUV, you're probably right around 40, upper 30s what your PSI is going to be. This tractor weighs tens of thousands of pounds and it's got PSI 12. So what you're getting is that wider footprint is going right to the ground. So all that horsepower and the strength of that tractor, the wheels and tires are not going to spin. It's going to grip to the ground, and what you're going to get is that stronger performance. So it's not just comfort. It's not just, hey, I'm more comfortable sitting in the cab. you're actually going to get a tractor that can handle any type of conditions. So if you think about a farmer, you got a really tight window. You make all your money in planting and harvesting. If you don't get in that field just because it's wet, just because the conditions are poor, you're just taking your money and burning it. With the LSWs, you don't have that issue. You can get in the field in any conditions. It can handle side hills that are soggy and wet. It can get that farmer the security of knowing their farmer income is going to be as high as it possibly can because they can take care of their crops. On top of it, the fuel efficiency. Simple physics. Bigger wheel means less revolutions. So they also are saving money on fuel. So they get the risk mitigation of being able to service their crops. They're getting fuel efficiency. But maybe most importantly is they're protecting their land. So the way tires used to be, they were all narrows, kind of a narrow tire in the ag space is about this wide. Now we're talking about 5 feet wide, but you would have duals, triples, even quads of narrow tires at high PSI that just went into the ground, like taking a hammer into the ground. You drive by farm fields, you see those ruts. So not good for a farmer. Just imagine trying to plant the next year and you're not getting the seed where they need to be as effectively, your yields go down. With LSW spreading that weight across a larger footprint at a low PSI, you're not getting the rutting and you're protecting the land. Huge benefit to farmers over the long run. So LSW seems like a simple concept. We all see it every day on on-road cars and trucks that we drive, but really for the farmers, it's meaningful to their quality of their income on an annual basis, protecting their income for the family for many generations to come. So.
Excellent. Now, 9 months ago, Titan acquired Carlstar. How's the integration progressed? Can you provide a quick overview of the transaction and the strategic rationale behind it? And when should we expect revenues and cost synergies of the acquisition to be fully accretive?
Yeah, thank you. So when we think about Carlstar, I'll just give a quick overview of what they do. So Carlstar manufactures wheels and tires just like Titan. And they're primarily in the consumer space, about 75% consumer, 25% ag. That's their customer base. Power sport equipment, outdoor power equipment, and high-speed trailers. So when Carlstar operates, they have factories in the U.S. and they have another factory in China, and they have a lot of relationships with third-party manufacturers as well. Within their space in the U.S., they are the only ones who have a factory in the U.S. within their space. All their competitors import. So they compete as well with their relationships outside of the U.S. with manufacturers and their factory in China. But they have the added advantage of having the U.S. facilities as well. The kind of tires they manufacture are smaller size products relative to what we manufacture. I mean, you can see the size of our wheels and our tires. Real large stuff, they manufacture smaller stuff relative to that. So what does that give us? It gives us a complementary set of products, and it allows Titan to become a one-stop shop for our customers. For Titan customers and Carlstar customers, they can come to one company and get all their needs on wheels and tires, whether it's the small, the big, consumer, ag, construction, we have it all. That was big when we think about the rationale for the acquisition. Then the other aspect is I talked about the facility in China and the relationships with third-party manufacturers. What that does is it allows us to compete with the other imports that come in. And it provides opportunities, which I'll talk about when we get to synergies. The other aspect is when we think about consumer, what drives the consumer market is different from what drives ag. Now, we know that we're in an ag cycle, down cycle at this time, but it's not the same thing with the consumer market. So when we then think about cycle management, how do we lessen the impact of cycles on our business? That's also a positive that comes from the acquisition, because Carlstar is holding up pretty good. Yeah, they have OE customers as well that are down, but it's largely aftermarket. They have a larger aftermarket base, and that's helping sustain things for them. So that's the strategic rationale around the acquisition. Integration, progressing really well, better than we would expect. Going in, we expected to realize certain synergies. We're already realizing those. This year, we expect to realize about $6 million in synergies. We've communicated that. Next year, we expect to realize more of that. There's certain synergies that are based on contract terms, which we have just negotiated on some of those, and will get triggered next year in terms of the benefits. So we'll continue to see some of that. And that's on the cost synergy side. But then let's talk about the commercial synergies as well. Remember I talked about complementary products. Well, Capstar did not have much of a presence in Latin America. We are in Latin America. We're a major player in Brazil, and so it's just an opportunity for us to be able to take Capstar products to Latin America. We have relationships in several countries in Latin America, direct and indirect presence in several countries. So we can take Capstar products there to expand growth. Similarly in Europe, they have a small presence there. Partnering with Titan, there's a great opportunity to expand sales there as well. And then let's come home to talk about the US and North America in general. Well, there are certain areas certain products which Titan did not bother to get into. Why? Because it's all dominated by imports and the margins are not what we felt we would compete with to be able to be in that market. But with Capstar's low-cost manufacturing capability, we can compete. That's upside for us. So there's a lot of synergies on the table for us. And we're already driving those, and we expect to see a ramp even beginning next year.
So you mentioned the one-stop shop strategy. How does that strategy improve the margin profile and operating efficiency of the overall Titan business?
Yeah. So when we think about the one-stop and being able to provide the customers everything they need, it's, what that does for us is it helps us partner closer with the customers. We become a better partner to the customers because they can come to us, get everything they need. In terms of the margin relationship to that, what happens is, what's the products, if you think about how the products go to market, we go to market via dealers and through the OE customers. And what we now have is we have better strength in terms of our market visibility. We have very good market intelligence on how we can price our products, whether it's OE or whether it's aftermarket. And that gives us better negotiating power, and that also allows us to be able to retain our margins. We don't have to go compete with the low margin guys and have to give up price. We're not giving up price to get volume. We're able to go out there and take on opportunities to grow our volumes given the opportunity we have out there, because these are products these are markets that we have openings to get into.
Great. Now, there have been some recent headlines about headwinds from lower farm income, some in the construction industry, so OEM destocking. How's Titan navigating the current operating environment?
Well, take what Tony just said about the one-stop shop and improved margins. And we've diversified our business tremendously over the last 10 years. So I think back 10 years ago, we operated in a narrow band of segments, had a more narrow range of products, pre-LSW. And we had a business that was really 75% sold to the OEMs. And so your cyclical markets, OEM driven, you can see that in our performance. I mean, the cycles were pretty wild, and at times our balance sheet paid a pretty heavy price, and we got into some difficulties with the structure of our balance sheet and liquidity. So what we have now is a broader based business, as Tony's been talking about. It's more diversified with a customer base. The one-stop shop gets us out there in the marketplace as a solution for the aftermarket, for the end users. You have a need that can be on a farm. You don't just run a tractor, you run utility vehicles, you run a whole host of different products that service the needs of that farm. We looked at it recently. There's about 300 different tires that we sell that can take care of everything a farmer needs. So we're a one-stop shop for a dealer, a one-stop shop for a farmer, but also for an OEM. John Deere is buying products in the full range of those segments that we've illustrated. So our power and our strength with our customer base is a lot stronger. And so as you look at what's going on with the headlines, to your question about farmer income and where things are at, farmer income does drive demand. There's no doubt about that. But if you can be a better provider to a farmer with all their needs, you certainly are going to be able to ride those cycles more smoothly over a period of time. Farmer income has been under pressure. I think one of the big things that is driven the pressure with farmer income over the last 4 years, who thinks food prices have gone up in this room by a wild amount? Your head's buried in the sand if you don't think that is somewhat a true statement. Farmer income's gone down. So where's all the money going? Where's the money going? And so one of the things that's gone on with farmer income is when, this is not a political statement, please don't take it as such, but when Trump was in office, China was buying more of their grains from the US per Trump's phase one negotiated deal with China. Guess what happened when Trump left office? They bought zero. Supply-demand equation is pretty simple. If there's less demand, also over the last 4-year period, supply has been abnormally high, meaning the weather conditions in the US have been very good and ripe for farm growth. That's true in Brazil, fairly true in Europe as well. So the supply's gone up, demand's gone down, farmer income has gone down as well. It's at lows that put you below kind of the 30-year average, but yet we're all paying way more for food. I think what's going on with the regime recently, with the regime change, is positive. I have no idea what the change means. I have no idea what the best element or basis for change is, but I can tell you status quo is not the right answer. We need to drive down food inflation. We need our farmers. We want to protect our farmers. Every country should want to protect their farmers. And we need to do a better job in the US. And so I think the changes that are coming will help improve farmer income. It's already helped with farmer sentiment. The survey came out either last night or this morning. We've already seen farmer sentiment spike. Now that's not money in their pocket yet, but that tells you they think something good is coming. And so again, I think we're in a period of time here where Titan is well positioned in the marketplace. We're getting through this downturn, this cycle, with a balance sheet that's still strong, and I think farmer income and some of these leading indicators of where the market's going are going to improve.
So since you mentioned the balance sheet, can you talk a little bit about the current financial condition of the company? And what's the net debt leverage ratio? You know, if you had to rank your capital allocation process, you know, how would, paying down debt, M&A, R&D, buybacks, share buybacks, how would you kind of rank them in terms of importance?
Yeah, thank you. So the company has a very healthy balance sheet. And then when you compare relative to where we've been in the past, in times like this, in down cycles like this, it's night and day. Our leverage ratio right now is about 2.8. I know it says 1.9. The reason it's 2.8 is we did a major share repurchase from one of our largest shareholders, and that's why it went up to 2.8. But it was an opportunity to take, given where the price is at, the price of the stock is at, and we said, look, it's a good opportunity, it's good for the long run, that's a good price, let's take it. So we took it, and the leverage ratio went up to, net leverage ratio went up to 2.8. However, that's not for us, that's well within our manageable limits. And in terms of our capital allocation, what we're focusing is just to pay down that revolver, which we used to repurchase those shares. So that would be the number one priority, get it down to a lower level, somewhere in the low twos. That's what we want to drive towards. We understand it's a down cycle. We need to understand that to weather through a down cycle, you need a strong balance sheet. And that's our focus. That's been our focus. Even when we're at the peak of the cycle and the market was high, we knew that at some point a down cycle will come. And what we try to do then is prepare ourselves for a down cycle. And that's what we've done very well. And so we're in a very comfortable position as a company to manage through the cycle and prepare for the future.
So if I'm not mistaken, the share buyback, you bought back about 11% of the shares outstanding?
Yes, 8 million shares.
So a significant repurchase there.
It is a significant one, yeah.
Now, nearly half of the revenues are generated internationally for the company. You know, what's your strategy to further diversify your customer base and expand their geographical footprint? Are there any geographical markets that you don't currently compete in that you believe could be a growth opportunity in the future?
Yeah, it's a really good question. And Tony did mention some elements of this recent acquisition we did that kind of play into the response to this. But we are a global company. Half our revenue is coming from overseas. Our plants are fairly well diversified around the world, but there's a lot of pockets within our portfolio of products that we're not servicing the market entirely. So if you look at some of the lower price consumer-based products, I mean, we now have access to, as Tony mentioned, Chinese manufacturing along with U.S. manufacturing. Before, when you're only manufacturing those products in the US, it was difficult to get into, let's use Central America as an example, get into Eastern Europe. And so with our mix of plants geographically positioned around the world in some lower cost countries now, we now have the ability to take our product portfolio and really go global into just about any piece of the market that we currently aren't servicing. And so one of the things we need to continue to do is build that connection to the end user to go do that. I mean, when Titan enters the market, we do it based upon the strength of our brand, our relationships with the customer, our dealer base that's going to service that customer well. So when we do it, we're going to do it well, we're going to do it right, we're going to put up the fortress around where we go and our presence. Where that also leads into future growth is third-party manufacturing. We don't have to necessarily, we have 2 plants in China right now as we speak, and we have a joint venture with a third. But we don't, when you have a strong brand, you have the world's best product assortment in your industry, and you have strong relationships with end users and dealers, we can leverage that to get access to third-party manufacturing where we don't have to buy into a new plant. We can work with that plant, work with that owner of that operation and say, look, we are put your product in our hands, and we will be the best stewards to get your product into the marketplace more effectively than you could possibly dream of, utilizing the strength of us, our technical resources, our representation in the marketplace, and our brand. And so we're seeing a lot of avenues open up where we don't have to necessarily manufacture it ourselves. We don't necessarily have to have a joint venture with that plant. We can just be exactly what they need, which is the stewards of their product. And we're seeing some really good opportunities for growth there. So, flat market, Titan sees a good path ahead to continue to grow. And eventually, cyclical markets do turn. I don't know if I can sit here and tell you today exactly when that happens, but I can tell you with a strong degree of confidence, it is going to turn, and that turn will be nearer in the horizon than what it looks like today.
We only got a couple minutes left. I don't know if you wanted to take some questions from the audience.
Yeah.
Yes, military, huge number of off-road vehicles. Have you approached that one?
We are now as we speak. It's a market that we had exited / been kind of forced out of it. A lot of the military in our particular space, I'm only commenting about our space, those decisions were offloaded to a foreign entity. Yeah, so foreign entity was making the decisions for where the U.S. military was procuring products. And in our space, we have the capabilities, and we've been talking about our portfolio assortment is only getting bigger, and we can manufacture some of them in lower cost countries if that's what our military desires. But our military, I believe under the new president, will look to buy more products from the U.S. They have not been buying them from Titan. I will go on record stating that. I do have a meeting next week with the 2-star general trying to figure out how we can sell more to the military. Makes sense, doesn't it?
Oh, yeah.
We still have the capability. We haven't forgot how to do it. They just haven't been knocking on our doors, so we're going to go knock on theirs.
Good question. So if you look, given your cyclical and we're going up and down and you've made the acquisition, how do you expect the stock to trade when we look at peak to trough multiples, let's say on EBITDA over these cycles? So essentially, are we going to be going up now because of the mix and be accorded a higher multiple on the next upturn, or how do you see that?
It's a complicated answer. Joe could probably answer that better than us. It's frustrating because for a company our size, I mean, we have, from a revenue base, from a customer penetration base, we're strong and sizable in what we do. But from an investor standpoint, it's hard to get attention. And so right now the headlines have been ag is weak. It's hard to get beyond that. And maybe call it the new AI-driven world. I don't know how to best characterize it, but it's difficult for our message about what we just talked about with you for the last 25 minutes to be heard in the investment community when the headline says ag is weak.
With more than 6,000 small and micro cap companies listed, if you're looking for the next Apple, then Channel Check truly is your tree. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series luncheons, and to be part of the preeminent annual Small and Micro Cap Investor Conference, NobleCon. And here's the best news. Since Channel Check is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channel Check is North America's leading source of research on the companies that just may change the world.